Hey everyone, my name's Andy. My channel is Finding Value. If you like this content, please subscribe, click the thumbs up button, help me out and grow my channel. Today we're going to go over gains using ratios. And what I'm going to do is I'm going to show you some ratios. We're going to use the commodity to S&P 500 ratio, and then since that's in alignment with also an gold to oil ratio, I'm going to show you how that lines up with stocks and what those returns would be if you used the top and bottom of those ratios. This will hopefully give you a lot more confidence using ratios and confidence in the timing of your purchases to absolutely destroy the returns that you've probably previously had in investing. So I'm going to jump in here and show you what it looks like and give you more evidence and more confidence in using ratios. I lived through this, so using the ratios and seeing it, it obviously convinced me. I'm going to use ratios and overlay them over stock prices of the last bull market. I want you to gain the confidence in using ratios and see how they predicted the last bull market and some of the returns they will give us going forward. Need to use ratio to buy and sell stock. I also use technical analysis to fine-tune the entry and exit points of everything. And that's why I do those market updates, the weekly look-aheads. I do all of these things to better prepare us to see what is out there to purchase. So again, this is the commodity to S&P 500 ratio. The green is buy points for commodities, and red is exit points for commodities and buy points for the S&P 500. So we're going to look, and I overlaid this onto the oil to gold chart. So cheap, this is expensive, cheap, expensive, and today it got to an extreme cheap point, but we're still cheap with regards to historical basis. So what does that look like in returns for the last bull market? That green circle aligns with this right here. It's this one right here. So it was a 84 cents, and it went all the way to the red line, and that's where it said that the ratio was expensive and that you should sell. For SWN, it was a 57 times return, 5,600% return. For Suncor Energy, it had a 47 times return, 4,600%. And you can see I put the buy signal down again. This would be down here, a buy signal right in here, just to show you. MCF, 927 times your money, 91,700%. Green to red, and again, we're getting a green signal to buy down here. This one's uranium, and it lines up with this peak here in about 2000 because it was increasing and you want it to turn. And this one, it had a signal here to sell. For CCJ, and this is a larger producer, it was almost a 10x, 850% gain. And then I threw in SM Energy as well on the back end of this because I know a lot of people are in it and they're probably wondering what did SM Energy do. Green here to red, it was a 13 times return, 1,200%. And we're getting a green buy indicator again down here. So it would be good to enter. So the conclusion here is big gains can be had using ratios, especially in dollar terms. Obviously, you're going to want to rotate out of these at the top and swap to another asset that is cheap, probably the Dow at that time frame, but that's ways out. Stocks were cheap in 2009, and that would have been the ultimate play if one could pull it off. Sell your commodities, hold it in dollars for about I say 6 months, and then sell it, or buy the Dow at the bottom, or companies, other companies that are going to outperform the Dow, like MasterCard, Visa, all those, Chipotle. So another thing that you want to tie into is the housing starts. You're going to look at my other videos, but housing starts will tell you if you have a problem in real estate, and real estate will crash everything. It'll crash real estate, it'll crash the stock market, it will crash everything because it's a deflationary collapse when we're in an overbuilt state. That's going to happen. It could be 7 to 10 years from now, and that's probably when the commodities will be topping, is right when the housing starts. So when you have this alignment, when commodities get expensive to the S&P 500, when housing starts peak and they start to go down, when you start seeing the metrics change in real estate, that is, days on the market change, inventory goes higher, interest rates are high, prices are high, all those things start to reverse, foreclosures start ramping up. You've got about a year or two for that to turn kind of crappy, and then housing starts will turn down and prices will go in real estate. That will bring everything down. But that's probably 2027 to 2030 is the time frame, and that's my guess. We haven't really had prices in real estate are just starting to shoot higher. They're going to go way higher in my opinion, and then eventually the housing starts are going to follow it. That's my prediction. So 2027 to 2030 is probably going to be the peak. These will probably peak roughly in that area, maybe even a little bit past it. It depends, because I think some of these, the commodity sign will flash, but gold will go 3 years after, silver will go 3 years after roughly. At least that's historically has been the case. So we can play this pretty well. This channel is set up extremely well to take advantage of all of those things. So if you like this content, please subscribe, click the thumbs up button, and leave comments. If you don't understand what's going on here, leave some comments. I can create more videos for you guys to better understand how to use ratios, what that value is, and maybe more and deeper explanations of what it really is behind the scenes. Thanks for listening. This is Finding Value.